Okay, folks, welcome to Sunday Night Stock Market Futures Live. This is Bob Desmond over at the Contrarian Trader, and thank you for spending a few minutes of time with me tonight. And we're going to talk about the futures. We're going to talk about some charts that I have with regard to the macro picture of the global economy, U.S. economy, and how things appear to be slowing down in a very dramatic way. We're watching the futures open up. This is gold at current. We spiked up higher. We're still higher, but we're off the highs of the session. It's going to take a moment for the futures to settle down some, and we'll come back to the futures in a moment. But at current, we do have a new weekly high on gold. Not a new monthly high yet. The monthly high for January was 1613.30, and we will definitely come back and check out this chart in a moment. And while we wait for people to populate and stop in, we'll go over the headlines that I think are worth talking about, as well as some charts about the global health of our economy. So let's get to it, and we'll come back to this. All right, so this chart here is a chart of the Chicago PMI, and this is a PMI, Purchasing Managers Index. And a purchasing manager, he's the guy that says, all right, it's time to buy desks because we want to hire new employees. They're very important people when it comes down to the intent of what a company plans on doing in the future. Will they make capital expenditures? The PMI, the purchasing managers, know that. And it's always important to have a pulse of what they're doing. And the Chicago PMI is one of many PMIs out there. Most, if not all, use a metric, a measure of expansion, meaning a reading over 50. And contraction is a reading below 50. So the global PMI is similar to the Chicago PMI, very similar. So we're going to spend a moment here and talk about what's going on with the purchasing managers in at least the Chicago region. But if you take a look at the global PMI, it's very similar. So this is a very good chart to go over. And you can see that back in June of 2019, it was our first drop below 50 for several months since February 2017. And we pulled back the second month in July, but then we spiked up higher, back above 50. Then here's where things got ugly. We dropped back down in September. Since September, we have not had a reading above 50 on the Chicago PMI. All of these months since September have been below 50. And all but 1 month since June of 2019 have been below 50. So this is extremely negative for the U.S. economy, for the global economy, because again, if you look at the global PMI, it's very similar. Hey, Sam. It's very similar to what you're looking at here on the Chicago PMI. And we have charts to validate what we're seeing here. If you take a look at the Baltic Dry Sea Index, these are just some of the charts. I don't talk about it often, but I refer back to them just to do a pulse check of where we're at with regards to the health of the global economy. And you can see that the Baltic Dry Sea Index, if you're not familiar with what the BDI is, it's the pricing power of dry bulk shippers. And if you have a huge demand to ship goods, obviously that pricing power is going to be a lot greater than if there were not a huge demand for their services. And you can see that prices aren't just pulling back, they're cratering. And we have smashed through several support levels in a very short period of time. When did this sell-off begin? Oddly enough, September of 2019. or not so oddly enough, when did we pull back down below 50 on the PMI? September of 2019. So you're seeing dramatic weakness in the pricing power of dry bulk shippers. Let's move on. If you take a look at the Dow Jones US Containers and Packaging Index, this chart here is ready to roll over. Let's throw some lines up here. In fact, for the month of January, we flashed a breakout point failure. What does that mean? It means that we broke out here in December. A lot of optimism. We broke out above the upper band of resistance that appeared to be game on to the upside for the Dow Jones Containers and Packaging Index. That's a sign of, it's a big sign of health in the economy. But what happened in January? We rolled over. Not only were we down on the month, we failed to hold the breakout. We also flashed an outside reversal bar, and this is very negative. So when you get a breakout point failure, meaning you break out and fail to hold it, in all probability, you are pulling back to this lower band of support, and there's a good chance that you break that lower band of support. And this is not a good sign for the U.S. economy. And you can see that we were down in January on very, very heavy volume. Another chart. This is the Ishares commodity index, and it's a monthly chart. Again, we want to stay very, very high level here. And folks, if I can ask you to hit that like button, I'd really appreciate it. It helps me out with the YouTube algorithms. Thank you very much. Hey, Kurt, good to see you again. Thanks for joining. Okay, so on a monthly basis, the commodity index, another bearish engulfing of the prior month's move. This is very, very negative. So let's throw some lines up here. I wish I had better news on Super Bowl Sunday, but this is bad. So what we're seeing here is very similar to what we're seeing on the Containers and Packaging Index, where we had a breakout point failure, right? Breakout point failure and a bearish engulfing of the prior month's move. What happened here in the commodity space in the month of January? We had a bearish engulfing of the prior month's move. We had broken out in the month of December. We have failed to hold that breakout. Not only do we retrace down to the lower band of support of this prior consolidation, we have broken down below it. We closed down below that level. Very bearish stuff. You're not going to hear this on CNBC, folks. You're just not going to hear it. Yeah, I think I know they banned short selling. I'm going to go to that article in a moment, Sam. And they're going to be priming the pumps over there, no doubt about it. They have to. Copper. So this is another monthly chart. Let's throw some lines up here. Copper is heavily followed as a measure of global growth. And you can see that we are flirting with a potential, let's just call it a retest of prior support. We're probably going to retest it fairly soon. We'll go to copper in a moment in the futures. But last month, for the month of January, a bearish engulfing of the prior month's move. Very nasty stuff. and we were down on volume. So, as we make these observations, we have to draw certain conclusions. That the markets are now weak because of coronavirus. It's a catalyst. It could be perceived as a black swan event, no doubt about it. But to say that the cause of what we're seeing in the markets is generated by the coronavirus is ridiculous. It's ridiculous. Can it hurt sentiment? I have little doubt that it will. Can it force a recession? I have little doubt that it will force a recession, because you're shutting down China. I believe it's domestic flights inbound from China. They're cut off. And it's not just the United States, it's other countries as well. That's going to be a huge hit to global trade. So it's in my opinion, probably a foregone conclusion that we're going into a global recession. But this is a recession in the making well before coronavirus. And the Federal Reserve gave us the clue back in September. Remember the PMI, right? When did PMI go negative yet again? In September. When did all the damage start getting done to the Baltic Dry Sea Index? Not so much the Dow Jones, containers and packaging, and not so much commodities. Copper has been weak, but the BDI and the PMI breaking down, that coincides with the Federal Reserve and their intervention in the financial markets. And you could see that last week, let's go to a one-year view. Last week, after pulling back, they began buying yet again. But they don't want to talk about it. They don't want to talk about it. So QE4 is alive and well. And is it any wonder that they began this program as the PMI numbers began to go negative? Hey Pat, nat gas has been killed. Getting killed now in the futures? I know in the past couple of weeks it's been hammered. It's actually getting to be pretty interesting. And for those folks just joined, if I could ask you to hit that like button, I'd really appreciate it. Thank you very much. All right, let's go to some of the headlines that is really going to help ramp up the selling. This is typical bureaucratic reactions to sell-offs in the market. They ban short selling. China banned short selling plans, massive liquidity injection, prevent market crash. These people are out of control. The efficiency of a market is reliant upon short selling. You need to have short selling. If you don't have short selling, you don't have a market. So the Chinese are doing their best to add fuel to the fire. Here, more. This is why you can't trust the Chinese. The government, the Communist Party, the people, fine. China censors top local media outlet over claims Beijing is underreporting cases and deaths. Do you have a little doubt that they're underreporting? Here's the New York Times. Second case of coronavirus declared in California, as New York Times suggests pandemic. That'll get them more clicks. So this is not going to be good for the markets going into the new trading week. And this is what's going to be really bad for the Chinese Communist Party. When you have people, the people that you are dictating over no longer afraid of you, this is a major threat to the Chinese Communist Party. When you have her, this lady's probably going to disappear. When you have her speaking out against the Chinese Communist Party, a major, major problem for the Chinese. This photo here, this video, is their worst nightmare. Now, leaving things off on a positive note, before we go into the futures market, I want to leave off with where we are looking? Where are we investing our money? I sit here every Sunday night and I talk about my observations and I say what's bad, but we also want to say what's good, what's going right. And if you need to take a look at what's going right, folks, I have been saying this for months now. You need to take a look at gold. Gold last month broke out. And it held that it held that breakout. We are at highs not seen since March of 2013 on gold. So when you're looking at these markets and you're trying to decide, where do I place my money? You place your money where people are rotating their money into during a time of fear. And guess what? Gold is one of them, but the dollar, last week anyway, I haven't seen what it's doing in the pre-markets. The dollar last week was decimated. Bearish key reversal week last week. Volume wasn't that bad. We're going to go to the futures now. I'm going to kick things off with the US dollar. I want to see whether or not that is following through to the downside. But this is not a pretty picture for the US dollar. Let's get to it. Let's bring up the Dixie. Relative to last week, it's showing that we're down, but it looks like we're rallying off the lows here. We're coming back. So we'll see whether or not they can close it above this current resistance level. Yeah, it traded down after hours. That's why it's showing down this evening, on Sunday evening. It traded down after hours on Friday evening. And now it's being bid up on Sunday evening. So it's actually off the lows of Friday after hours session. Let's take a look at the euro. The euro is surging, which puts into question the ability of the US dollar to hold this rally. I mean, this is a big rally here on the euro. The euro is the largest counterparty within the Dixie, the dollar, the basket of currencies that the dollar trades against. So the Dixie, the largest counterparty is the euro. Now the euro is breaking out of a sound base where the dollar is just flashing a dead cat bounce. I'm going to side with the euro. And it's especially interesting that the euro is rallying after Brexit. So it looks like we have a buy the event on the euro. Let's check out the British pound. The pound is surging, another buy the event. The Japanese yen. It's down so far today, but I mean, Friday was a very, very powerful day. And you can see why the dollar was so weak on Friday and Thursday. Let's take a look at Bitcoin. Bitcoin is up. It had a rough Friday, actually a rough Thursday and Friday. It had moved up higher, then it rolled over. This is going to act now, was support. This is now going to act as the upper band of resistance. This now becomes support. So Bitcoin is up. Path of least resistance is to the upside. Let's take a look at gold. We'll revisit it. It was up earlier. It remains up. It's off the highs of the session. Again, we have a new weekly high, not a new monthly high. Yeah, Bitcoin is down, Pat? I showed it's up. Maybe there's some glitch on one of the systems. Let's take a look at crude oil. And then I want to take a look at nat gas. Oh boy, this is a problem. So crude is down yet again. We have a new weekly low. So here's one thing that's interesting here with oil, is that while we are making lower lows on price, we have a positive divergence on RSI. So I'm suspecting that we may at some point in time early this week get a counter trend rally. Okay, so we're going to keep an eye on crude oil because there may be a trade to be had here. We may be putting in a possible double bottom setup on RSI as well, a higher low. It means nothing until, of course, we begin to break out. We see price stabilization. We don't have either yet. So it's just something to watch out for right now. Let's take a look at some comments. Bad story with crude oil. Pat, now you have it down as 18. I don't know what to say. What charting software are you using? Because it may be a delayed quote from Friday. I don't know, Pat. What software are you using? Let's go to nat gas. Nat gas catching a bid. Still a disaster area. Let's clean this up. Begin anew. All right, so we have a bit of a breakout here on a 4-hour chart. I have little doubt that we're going to pull back and do a retest. So I would not be a buyer of nat gas yet. Too much damage has been done here. You need to have pullbacks, higher lows put in, retests of breakout points. So nat gas is a watch. Let's take a look at the stock market futures. Let's see what's going on there. Let's go with the S&Ps first, the E-minis. Okay. Bouncing back here. up a little over a third of a percentage point. Let's take a look at the Nasdaq. The Nasdaq is holding support. We're up about a third of a percentage point. The trip Qs, of which we are short, they are up as well by about a third of a point to show. Actually, they're pulling back a little bit now, but I'll revisit these later on. We're going to go into the members inner circle at 7 p.m. members, and I'll send out a link to that in a few minutes. Get your symbols ready, and I'll discuss the symbols that you want me to go over on the charts. I want to take a look at palladium. Palladium was on a huge tear, and it pulled back a bit last week. So we broke out. Now we're pulling back, and we're trying to do a retest here. There may be a trade to the long side here, but what it must do is it must hold this support level here in orange, and it must break out above this resistance level. Then it becomes a long. We'll be looking at PALL as a potential vehicle to get long of palladium. What else do we want to take a look at? I have a couple minutes left. Let's take a look at copper. There may be a trade here on copper. Take a look at this. RSI, positive divergence, pushing up higher with copper pushing lower. And now we are reversing off the lows of the session. I'll be watching for an engulfing of this bar here. If we get that, there could be a long trade on copper to be had. And in fact, what copper did, this is interesting. Copper broke out here on a 4-hour chart on the 30th. It has since been pulling back, retesting that breakout point. If you're wondering what am I talking about, retest the breakout point, it's doing that right now. It was resistance, now it's acting as support. So what we want to see is a continuation move higher out of this consolidation. And then you're going to get a nice short covering rally on copper. I'm sure it's heavily shorted. All right, everybody's going to the Super Bowl. Okay. I know there is a copper ETF out there. I'd have to look it up. It's been a while. Kurt, so Chinese stocks on U.S. exchange cannot be shorted. No, I believe their ADRs can be shorted, Kurt. I think it's the stocks that are trading on the Shanghai that cannot be shorted. So the ADRs trading on in the U.S. markets could probably still be shorted. All right, folks. I know everybody's going to check out the Super Bowl. Everybody have a great night. Members, I'm going to send out a link to the Members Inner Circle, 7 p.m. Eastern Standard Time. If I could ask you to hit that like button, thank you very much. Everybody enjoy the game. Have a profitable trading week, and thanks for joining. Be well.